Students, welcome to my class. In my today's class, we will see how we can actually project the cash flow statement. I have taken a question. The question is seen here. The balance sheet of Bhavishya Enterprises at the end of year 1 or year end, the year which is just over, is as follows. Anytime you are given year 1 or year n plus 1, it means that the year is just over. It is a current year. Liabilities are provided to you: share capital, reserves and surplus, secured loan, unsecured loan, current liabilities and provisions. The amount is provided to you in lakhs. Assets is also given to you: fixed asset, investment, current assets, cash, receivables, inventory. And now see the projected income statement and the distribution of earnings for year n plus 1 is given below. Amount in lakhs. Sales is 400, cost of goods sold is 300, depreciation is 220, profit before interest and tax is 80, interest is 20, PBT is 60, tax is 30, profit after tax is 30, dividends is 10, retained earnings is 20. Now what is given to you during the year n plus 1? That is the following year. The firm plans to raise a secured term loan of 20. Now what does that mean? If you are in the year 2022, now we will project it for 2023. So during the year 1, the firm has its own plan. So one of the plan is to raise a secured term loan, which is 20. But it has also a term loan of 80, which is a secured loan. And it is expecting to repay that to the extent of 5. So this is going to reduce by 5. Increased unsecured loan by 10, which means there is additional borrowing in terms of loan. Current liabilities and provisions are expected to remain unchanged, which means 90 is going to continue to be the same. You have no plans to repay. Further, the firm has planned to acquire fixed asset worth 30. So there is an additional purchase of fixed asset and there is also an additional purchase of inventory by 10. Receivables are expected to increase by 15. So this is going to add up to your current asset and also your working capital. Other assets would remain unchanged except of course of cash. This means that, see, when you are actually raising money from bank and repaying them normally, and again you have acquiring the fixed asset, so this is going to definitely change your cash position. So all other assets remains the same except for cash, because cash is going to definitely see a change in the balance. The firm has planned to pay 10 by way of equity dividend. So which means there is a payment of dividend, which is an appropriation to your profit. This would certainly affect your financing activity and also the cash flow. So given the above information, you are told to prepare the projected cash flow of Bhavishya Enterprises. Now what is the solution? So quickly we'll go through the solution. Now we can take the cash flows in two ways. One is the same way how you have your cash flow statement with operating activity, investing activity and financing activity. So another way of showing this across is in the form of sources of fund and disposal or disbursement of fund or disposition of fund. So we have taken this one statement. Just have a look at it. We have categorized them into sources of fund and disposition of fund. So remember your cash flows as those three activities in mind. So the first one is the operating activity. So if you have to take that, profit before tax with interest will be added back. Now we look at this. What is the EBIT given to us? It is 80. So that is how it is taken as 80. Add back the depreciation. Depreciation is added back. 20 is the depreciation and we have taken it. And then we have increase in the secured loan. This is your term loan that is raised. So there is increase in the term loan to the extent of 20. Here if you just see, because you're going to repay 5 of it, the total increase is seen. Now if you just have a look at it, secured loan is 80, unsecured secured loan is 80 only. Okay. So now 20 is raised, which means additional loan, and then you have repaid how much? 5. So overall impact, if you see, it is only 15. So we've taken that 15 here. There is also increase in the unsecured loan, which is given to you, and as it is, we have taken this in 10. Disposition of fund. There is an additional fixed asset that you have planned to buy worth rupees 30. It is an investing activity. So I have taken 30. It is here. And there is also increase in the working capital by 25. Now, if you see, 10 is the inventory and another 15 is receivables. Current asset, if you take inventory and receivables, are two main components, and this is going to definitely increase the working capital. So 10 plus 15 is 25, and 25 is taken over here as increase in working capital. Besides that, there is also interest that you have to pay. See, interest is that which will, interest is a financial expense, and how much is the interest that you're going to pay. And we see that interest is around 20 here, and then there is a dividend of 10 and also your tax of 30. Just have a look at it. Interest is 20, taxation is 30, dividend is 10. So we have tried to find the difference between A and B. 125 minus 115 is around 10. Okay, this is the surplus. A minus B is 10. Cash balance that we have in the beginning as per the balance sheet is 20. So we've taken 20 here. So opening balance, in fact, you can take the net surplus and deficit in the first row. After that, you can add back the opening balance. So 10 plus 20 is 30, and the closing balance obviously will be 30. Go back to your balance sheet. It is 20 here because it is the closing balance of the previous period. You should not get confused. This becomes the opening balance for the next period. How do you get this 30? 30 is after making all the adjustments. If you just have a look at the cash, so if you have time, you can just go through the cash account to see the difference, and definitely you'll find that your cash will have 30 lakhs as the balance. Okay, you have some payment. So if you take the opening balance of cash, just have a look at this. Opening balance of cash is how much? We're just cross checking. Okay, balance of cash is around 20. Then there is a additional increase in the secured loan to the extent of 20. Unsecured loan we have 10. So 20, then we have again 20. Yeah. Unsecured loan is 10. Then we have payment of 5. Then there is an addition of 30. Then again there is additional purchase made on fixed asset, which is 30 rupees. Then there is interest that you have paid to the extent of 20. Now actually you can just prepare your cash account to see the difference, and definitely you'll find the total as 30 here. Yeah, hope this problem helped you. Thank you so much.